Morning. Good morning, everyone. And sorry we're picking up late. Just had some technical issues signing in. This is the morning market review, and it's Thursday, the 9th of November. My name is Russell. I'm a senior market specialist at FXCM, and I just want to highlight my email address, which is rshaw@fxcm.com, which is of course the email that you guys can use to correspond with myself. I'm just going to go ahead and bring up our disclaimers. Here's the high risk investment warning. Can you guys hear me all right? I just want to double check. Hey Kim, good morning. Morning Raj. Hey Murray. James. Okay, excellent. Thanks Gurdeep. Good morning to you all. All right, let's just keep this risk investment warning on for a few moments. Okay, here is our market commentaries disclaimer. Hey Katie, good morning. Thank you, Howard. All right, and here is our references, MarketScope 2.0 and TradingView.com. And of course, we'll start off with TradingView. And what we'll do is we shall just take a look at the real yield. Just going to bring up the real yield. And what you can see here is that the real yield, we're looking at the daily chart of the real yield, is moving in the direction. It's moving in this direction. So the real yield, okay, starting to pull down. And if it's starting to pull down, then we probably see some sort of US dollar weakness, probably see some support for the risk markets. That's what we're going to look at this morning. You can see that the RSI is below 50. So there is an underlying momentum that is suggesting softness in the real yield, and that's something that we've been working on for a good few webinars now. If we're getting some sort of softness in the real yield, well, let's take a look at US dollar. I'm going to bring US dollar up underneath that. Gurdeep saying dollar not reacting. Let's take a look at it. All right, let's bring it up. Let's bring it up. Okay, let's bring it up. We'll put it underneath. Okay, so we do have some sort of movement to the downside, Gurdeep, from here to here, but as you're saying, there is some sort of support coming in now. So there does seem to be some sort of break in the correlation coefficient. Let's just go ahead and put in correlation coefficient. And we'll make sure that we're looking at the US dollar here. And we'll take a look at this on multiple time frames. So let's just take a look at it first on the daily time frame. And we've still got a strong correlation coefficient here, Goody. We've got 74%. So what that suggests to me is that perhaps, because we have to wait and see, the US dollar has to catch up with the real yield, or the real yield has to catch up with the US dollar, one or the other. I'm of the opinion that we're done in terms of hiking rates, subject to correction. Obviously, that's something that we have to keep an eye on. But if we're getting some sort of movement up here, let's just bring in the arrow. If we're getting some sort of movement up here, then perhaps that's maybe an exploitable opportunity. Let's just take a look at this on the weekly time frame, get a correlation coefficient from the weekly. And it's very strong, it's at 91%. So you can see that, let's just take off the indicators. Let's just put the US dollar underneath. Looking at this on a weekly scale, and you can see the correlation is still pretty tight here. Okay. Correlation is still pretty tight. There is some sort of divergence, as Griep's saying. Just the last few days, the dollar perhaps moving up. But I think that we need to watch this if it's perhaps something that is exploitable. So what we're going to do is we will bring up the US dollar on our market scope. And let's just take a look at this in terms of market scope. Zoom in here. And you can see here's the dominant candle. Here's the dominant candle. Okay, that dominant candle is really a reflection of the softer jobs data that came through. And if this is the dominant candle, and why am I saying it's a dominant candle? Here's the reference candle. Here's the completion of the reference candle signal. And now we've got some blue. Okay, let's just take a look at this on the daily chart. And what we are potentially looking at is to see if this is a rally in some sort of downtrend. So we are in zone 3, and there have been some 3 strong days, but we do have the RSI, which is below 50. Okay, now let's see if it's setting up in terms of some sort of exploitable signal. Let's take a look. All right, so we've been looking at this resistance area. To be fair, the resistance area has held. Okay, the resistance area is up, but it hasn't really been a key reaction, has it? In fact, we're probably moving in some sort of sideways pattern. It almost looks as if it is a rectangle, some sort of trading range. So if we can kind of bend it in, just take a look. So there's no real damage to the upside, but there's no real damage to the downside either. Again, trading ranges. So it looks like we've been ranging, okay, since the 7th. Okay, since about the 7th, we've been ranging sideways. Well, it's inherently difficult to trade ranges. It's much easier to trade trends. And in that respect, the EMAs, they try and aid us because they are trend following indicators. You know what? In other words, they'll give us signals, but the signals will only be good signals if we have some sort of trend following action. So we haven't had trend following action, we've had congestion. So we've had a whipsaw over there. We've had a whipsaw over here, whipsaws. So there's just we're not seeing the we're not getting the action that we want. I just deleted the pivots. I'm going to just bring those in. Let's just bring in the pivots. Okay, so we right at the central pivot. What we can do is we can just see if there is going to be a downwards cross in the EMAs, and we'll see if there's going to be a downwards cross in the stochastic. It's just tough going at the moment because of the sideways movement. Because we're moving in the sideways movement, we've got these whipsaws, right? Okay, so the idea here is let's just see if we get some crosswards down, angle and separation, etc. What has been going on though, and something that's worth us taking note, is that the risk markets seem to be reacting to the movement down the real rate. So instead of looking at the US dollar to the real rate, let's take a look at some of the risk indexes, such as the stock market indexes, and see what's happening there. So let's change this US dollar. Let's put this in as NASDAQ 100. So let's put in NAS 100 here. I'll choose the FXCM CFD. And you can see that we've kind of got the movement there. Okay. And then we've got the movement here. Okay, so the correlation here looks more intact than the US dollar. I'm suspecting the US dollar catches up, but we're going to just have to wait and see if we get those signals, right? But you can see that as the real yields kick down over the last two sticks, we've got the NASDAQ, which has been supported. So let's take a look at the NASDAQ in more detail. So we'll bring up NAS 100. You're just waiting for the chart to download, I'm begging your pardon. Okay, let's go through to the chart. Now, what we've been doing is looking at this green downward sloping trend line. It looks like we're breaking out. Isn't that fascinating? It looks like we're breaking out of this downward sloping trend line. So that's a bullish development. So let's just take a look at all the bullish signals that we have here. First of all, here's the reference candle. So if we go back to this candle over here, it's got the lowest low in at least a 3-candle cluster. The candle to the left has a higher low. The candle to the right has a high low. And then last week's candle completes the reference candle reversal. Okay, it completes it. It closes above the reference candle's high. So it's bullish signal number 1. Bullish signal number 2, it's now attacking this this downward sloping green trend line, and is looking to break out. Bullish signal number 2. Bullish signal number 3, we're above the 30-week exponential moving average. Okay, we're above this 30-week exponential moving average, Howard, and the 30-week exponential moving average is starting to point up. That's bullish signal number 3. And then take a look what's happening to the RSI. The RSI here has popped above 50. Okay, so as long as it maintains above 50, that's going to be bullish momentum support for the NASDAQ. If we go back to this rectangle area, and you can see that it's above 50, well, that's where the swing happens. That's the swing. Okay, so we've just moved back above into the 50 area, and if we hold, and that remains to be seen, then we've got a good-looking technical setup on the weekly chart for NASDAQ 100, right? And then what we can do is we can drill down further. We can go from the weekly chart, we can go through to the daily chart. So go through to the daily chart. Well, now it's in zone 1. Well, zone 1 is our bullish zone. That's between the upper blue and the upper red. And if we take a look at the RSI on the daily, it's nicely above 50 as well. So we've got the daily chart, which is synchronizing up with the weekly chart. Now let's go down to the hourly chart and see if we're getting any potential signals on the hourly chart for some timing purposes. So we go down. Now again, just like we have seen the dollar moving sideways since the 7th, there has been some sort of sideways movement in NASDAQ as well. However, take a look at this. Take a look at this. There is a potential bullish cross. We definitely need more angle and separation here. We've already got the bullish cross in the stochastic. So more angle and separation from the trend following indicators will obviously suggest that there is starting to be a trend movement. But where is the stochastic? Stochastic's getting pretty close to that upper quintile. And if we get into that upper quintile and hold, that's where the hourly swings take place. See? Swing there, and that's where we're in the upper quintile. So we're kind of looking pretty good on the hourly chart as well. So whilst the dollar has to play catch up with the real rate, the risk markets themselves seem to be complying, seem to be acting how we would suspect them to be acting. Let's take a look at the S&P 500. So we've looked at the Nasdaq. Nasdaq looks to be quite interesting. Let's just bring this up to the SPX 500. So let's type in SPX 500. Okay. What we'll do is we'll choose the FXCM CFD here. All right. And again, yeah, you can see the movement down, and yeah, you can see the movement up. So the stock market's behaving more in line with what we would expect, considering that the real rate is coming down. What we're going to do is we'll carry on looking at the US dollar and see if the US dollar is playing catch up. But if we are getting some sort of compliance from risk side of the market, well, okay, let's go through from Nasdaq 100. Let's bring up SPX 500. Just give me a moment while this downloads. Okay, and we'll just do a similar analysis, starting off from the weekly. So the SPX, the S&P 500 lagging the Nasdaq showing relative strength. In my opinion, that's good. When the Nasdaq leads the market has tended to perform exceptionally well. So the fact of the matter is that Nasdaq's starting to outperform the SPX again, and the reason that we see that it's outperforming is that the SPX is yet to break its green trend line. So it's challenging the green trend line. We do have the reference candle reversal over here, and then last week's candle closes above the reference candle's high. And then the 30-week exponential moving average is starting to move up as well. Take a look at the RSI. It's popped above 50. Okay, so you can see that as long as we are above 50, that's where the swing generally tends to happen. So there does seem to be some sort of bullish movement here. If you go through to the daily, okay, again, we're in zone 1. There is some sideways movement, but what we can do is we can take a look and see if we're getting more angle and separation here. We've already got a bullish crossover here in the stochastic. What's the final condition? The final condition is we need to move into the upper quintile of the stochastic and hold. Now, I just want to show you guys something very interesting. If we go back to trading view, what we're going to do is just take the NAS 100. So let's go NAS 100. I'll make sure it's the FXCM CFD. Okay, here's the Nasdaq. Okay, we've looked at that. What we want to do now is we want to divide that by the SPX 500. Okay, so here we go. Now what we're looking at is a relative strength chart. You're looking at a relative strength chart of the Nasdaq, the growth side of the market, to the SPX 500. Which I guess we could say is more value-based. Truth be told, we should probably be using the US 30, but it doesn't matter. We'll take a look here. And let's put the broad SPX 500 underneath. Okay. And what you can see is when the Nasdaq is outperforming, the S&P 500, tends to be an up move in the S&P 500 and the market. Well, we've just broken out above. Okay, we've just broken out above here. So potentially getting you know, the next movement up over here. Same story. Instead of taking a look at SPX 500, let's bring up NAS 100. Okay, and considering that the S&P 500 was moving up and considering that the relative strength is moving up, it's no surprise to see that the Nasdaq tends to lift. When the Nasdaq outperforms the S&P 500, clearly there seems to be some sort of bullish movement there. So we kind of breaking out here. So it looks as if we're moving into the next bullish phase. Well, it looks as if we're moving into the next bullish phase just as the real rates are coming down. So stock markets are looking very interesting. We just want to see if the forex market catches up with that. So the forex market being a little bit stubborn at the moment. So we'll carry on looking at that over the course of our webinars. Just to let you know, I'm not sure there's going to be a webinar tomorrow or not. I'm not sure. There's just something I've got to do on a personal capacity, in a personal capacity. But then next week I'm off from Monday to Thursday. So I'll be back Friday. So there's going to be no webinars next week between Monday to Thursday, and then we'll pick up again next Friday. And then I've just got to see how to manage my time tomorrow. So just be aware of that. Gurdeep writing year-end rally. That's very interesting. One of the articles I'm going to be writing today is on a Santa rally, Gurdeep, and we might be entering that indeed. So we might be going into that Santa rally. A very good observation. Yeah, I'm going to write on that today. All right. Any other questions there? Please go ahead and type those in. Any other questions? Go ahead, type those in. All right, guys, let's wrap up here. Thank you very much for joining me this morning. Gurdeep just saying, let's go through the DAX. All right, let's have a quick look at DAX. Let's take a quick look at DAX before we sign off. So I would suspect, Gurdeep, that if the Nasdaq is outperforming the value side of the markets, S&P and say the US 30, I would suspect that that's actually going to benefit the DAX as well. DAX is lagging, but you can see that it's starting to challenge its downsloping green trend line as well. It's just got to get above that 30-week exponential moving average. What's positive is that yesterday it did go into zone 1. So the DAX looking as if it is benefiting from the fact that we are potentially, as you say, going into that end of the year rally. What we need to see is the stochastic move into a positive cross here. And then, of course, what's the final condition? Then we need to see it go into the upper quintile and hold. And if it goes into the upper quintile and holds, that's where the swings take place. All right. Any other questions? Any other questions, guys? All right. Let us wrap up here. So I may see you tomorrow, I may not. I just need to see how to manage my time. But then after that, I will not see you until Friday next week. Thanks very much, guys, and speak to you then. Cheers.